Hey, good afternoon, everybody. This is Dennis Wilborn. I want to welcome you all to today's edition of How to Make Money Trading Stocks, Options, and ETFs. It is the last Friday in June 2019, and so things are looking like they're going to be settling out very interestingly going into the last part of today. If you're joining us via Facebook and or our YouTube channel, I want to welcome you and just ask you, feel free to share any of our content that is inclusive on the YouTube channel and our Facebook. We do one of these updates weekly. And so, again, welcome. And if you also give us a thumbs up and let us know and leave us a comment on how we're doing, we appreciate that. So let's get going with today's session. Again, welcome everybody. This is Dennis Wilborn with the Active Trend Traders. Welcome to How to Make Money Trading Stocks, Options, and ETFs. This is the first session, or the last session for June of 2019 as we move into the third quarter. The first two quarters have been very successful for us. And I want to remind everybody that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or nor a promise of future performance. I like this statement by Bruce Lee. Knowing is not enough, we must apply. Willing is not enough, we must do. Part of the things and one of the challenges of when somebody is learning how to trade, or even somebody who's been a trader for a long time, is the willingness to put in the time to continue sharpening your saw to become a better and better and better trader. And that's one of the things that we want to encourage people to do at Active Trend Trading. And one of the things we do is offering this free webinar. And the objective of this webinar every Friday is basically timely, actionable intel review at the end of each week, seeking to clarify, simplify market decisions so wealth can be multiplied for individual traders and our investors. Did you notice today's been kind of slow, sloppy, kind of sleepy? You'd think it was the summer doldrums that were starting to hit. I don't think it's that per se. What I think the primary reason for the market just being kind of in a sluggish personality today is the G20 meeting. It's going to happen in Japan over the weekend. And there's a lot of opportunity for both positive and or negative news coming out of the G20. Of course, one of the big things that people are looking for is there going to be a China deal? We look forward and or positive statements regarding China. It almost seems as if both the U.S. market and the Chinese market are the spring has been coiling. Good news will rocket us up higher. Bad news will potentially rocket us down lower. So we'll see what transpires, but it's very clear from what we're seeing as we move into the end of the day, as it appears as if prices are selling off just a little bit. People are trying to reduce their risk profile moving into the weekend. So that's basically, China deal or not. And we'll see what transpires as we move into that, going into the weekend. Just stand by. We could come in and see the futures on Sunday, and they could be up past all-time highs, or they could drop down and basically say, hey, we're going to sell off and go a little bit lower. If they do go lower, that may give us an opportunity to start dipping in and jumping on board some of the stocks. For the premium members, we've had some good trades this week that we've set up both for earnings and also the some ETFs and stocks that we've jumped into on the pullbacks into the moving averages. And those trades are working out fine. Here's where we're sitting as of about 9 o'clock this morning. As you can see, the Markets are off the highs from last year. Every one of the indexes is. However, they're continuing to kind of like just hold and hang out. S&P made a new high. Dow made a new high on the recent move. However, the NASDAQ Composite, and Russell have not done that. We're up about 14, almost 15% for the year so far. And cash flow plus profits for the month, a little bit over $4,000. So let's take a real quick look at what what I'm seeing in the markets, and then we can also jump over and just a couple. I want to take a look at a couple of stocks that you may be interested in. There we go. Okay, I've got a weekly chart on the left, a daily chart on the right. Let's go over and just look at the S&P. We use the spider as the stand-in for the S&P. There we go. Okay, as we see here with the S&P, we went up and made a new high, and this was, I think, Wednesday of last week. Popped their head up above it. Then the new high basically failed. We dropped down below the breakout area of 294.95. Dropped down close to the 20-day moving average. Started to put in a little bit of move higher, but we're now kind of stalled out. Indexes, if you will, just pay attention to one. We made a new high there, we made a new high here. However, look what's happening to your index and to your momentum indicators. The TSI on a weekly basis is showing us that, one, we're in a negative divergence. That oftentimes leads to follow on more downside. And in reality, that would be something that we would look forward to at this point, because we'd like to see a pullback back into the moving averages, maybe to the 8, which is approximately the same as the 50 and or the 100. Well, the 40, correction, the 20, which is approximately the 100-day moving average. A pullback into this area would be healthy. That would be about a 50% retracement, and then the anticipation we would bounce from there and start heading back up more into the middle of the year. We'll see if that transpires. As you can see, on the daily chart, TSI has started to turn back up. However, it may be one of those situations where we go up there and just retest about the 294 level and then sell off from that point. Again, getting back down and testing either the 50-day moving average, which is about 287.36, and or the 34-day moving average, just a little bit above that. Then secondly, what we've got on the Qs. Qs are showing us a slightly different story. As we see, it did not reach its all-time high a couple of weeks ago, about 191.32. So when it made its spring up out of this last move, did not reach it, sold off back below the 8. We'll be paying attention to it today. Is it going to close below the 8 or not? It's down a little bit. We've got a little bit of a mixed market today. The Russell's up, the NASDAQ's down, and the S&P is up slightly also. So we'll see what transpired. Again, the ideal place that I would like to see pick this up is if we get a pullback into this zone right here. Now, we may not get it. It may stop its drop. It may have already stopped its drop when it got down here about the 185 level. And so we may be looking at a bounce from that. But would like to see, come down here, test into this area, and then rebound from here. we'll see. It's one of those that the market's going to tell us what it's going to do. And then once we have that, we can make our decisions from there about what we want to do. IWM had basically got a really good bid yesterday, and we can see it's also getting a nice bid today. This may have something to do with the how the Fed was basically given some very dovish guidance about what it intends to do. As you can see, we've pushed almost all the way back up to its past high at the 156.19 level. However, what are we getting? We're also getting a little bit of negative divergence on the TSI, also on the market forecast, a little bit of divergence on the intermediate momentum line, and price actions are reaching a high, are on the other two momentum lines on the IWM. But this is a pretty nice, healthy move. We've broken back up above the 820. I mean, this whole cluster of moving averages there. And if we break out above this level there, that would basically say, hey, we are back into an uptrend on IWM. And as you can see, it's got some nice moves back up to the upside to close in on the high earlier this year. We still have the potential that we may turn over here. We did have a target, and this target is still in effect down here at about the 136.48 level on IWM if we break back down. And that this target here was based on from this swing low here on a weekly basis up to this swing high here, projecting down from a potential breakout about the 148 level. So that's the target we're looking for. Now, there's a couple of stocks you may want to keep your eye on going into next week. I would let them settle a little bit, but Lulu's looking good. And it's almost looks like it's ignoring what the market's doing, what the index is doing. Watch for a trade on Lulu on a bounce into this level here. It's kind of moving up. You have to make a determination on whether or not you want to whether or not you want to risk. I mean, you could trade it off of the 20 or a breakout above the 8, but if you did that, your stop would be down here below this swing low, and it would be right up, which is about 3.3%, or you could take it down below the 50-day moving average, which would be about a regular 5% stop. I would prefer to pick up a position in Lulu as it, if it retests down in this area, between the 34 and the 20. Another stock to keep your eye on is Team. Okay. Team, where I want to look at picking up Team, any kind of retest between the 34 right here, that's the golden colored dashed line, or the greenish dashed line, and the gold and the orange/gold area down here at the 123.93 target. So any kind of a retrace back into that area. You can also flip it over to the intraday chart to see if that's providing you a potential entry. Again, Team, it's been on a nice strong uptrend. It did a nice little pullback here and bounced higher. We know where we have resistance. We have resistance up here in the 137.55 level. We have earnings coming up on the 25th of July. So we may be looking at a pre-earnings run on that. Home Depot. Again, Home Depot has come out of, basically is working in a horizontal bound area. Come on, there we go. It has just broken out from that a little bit, and so we'll see but it has not broken out of the one that's further out here. Also has earnings coming up around the 8th, correction, the 20th of August. And none of these are in a buy zone. We need to get a pullback into the 820/34 combo for that kind of a potential buy. W-Day, Workday looked kind of like, when I was looking at this, it looked better, like one of the best ones in a very clearly defined area where you may be interested in taking a position, which it's down here hammering out right up off of the 50-day moving average. And so any kind of move that's down there in the 204 to 204.50 area, or even 205, would be an ideal place to potentially take a position. If you drop below the 202.50 level, you want to be out of that trade. And the two last ones are two potential downside trades. Boeing. This is interesting. Boeing actually looks like it may be setting up to actually spring up higher. Maybe looking for a earnings run. It has earnings coming up on the 24th of July, and so we'll be following that. And then Roku. Some of you may have been trading Roku to the upside. There we go. What has Roku done for you lately? You know, are any of you using Roku as a for entertainment purposes? TV, it's like a TV channel, right? Or a TV app. There we go. Okay, what we see with Roku that I thought was very interesting is one, okay, it made a heck of a nice run from $60 up to just shy of, or about 107. So one heck of a move there. However, what it's done here recently, we've done a pullback to the 34, and price action has not kicked in to bounce it off. Now, it may pull all the way back here to the 50-day moving average, which it has some strong support right there at about the 88.67 level. But if it revisits the 820 up here, the 820 has crossed over to the downside now. And so we could look at taking that for a downside trade. What kind of target would you anticipate on that? A couple of things you can do is just one, throw on a Fibonacci from this level here up to this level here to give you an idea where it may run into stronger level of support. And as you can see, it's already almost approached the 38.2, which is just above the 50. The 50% retracement is 81.85, and then the 618 is down here about 74.35. So that's something that I'll be keeping my eye on. Again, this could be a very classic pattern, which happens a lot as you get a drop. We have not dropped below the 50 yet. I would like to see a drop below the 50. Then you get a rally attempt to try to reclaim the past high, and then it falls short, rolls over, and then just dies. Because if it rolled over and died, and even if it fell all the way down to 60, that would be one heck of a nice little move. That's almost 40% down to the downside. So that's the stocks, that's the ETFs we're looking at going into next week. Of course, for premium members, we will be covering those in much more detail. One of the things that we've been working on here of late is our strategic compounding, utilizing strategy 2. Where are we sitting? Basically, I did not get this updated for today, but we picked up a little bit less than 5%. The objective of this 5% per week on, and continue to roll that forward. We are over 100% from when we began this and on $10,000. And so next we're going to be looking at about almost $1,300 is our target to meet our 5% for the week. The earning trades that we have been doing, we basically finish off our earning trades. This week we'll have about a week and a half to go until we regenerate earning trades, starting with Netflix on July 17th. And then we'll run through these again. This trade, utilizing either an iron condor type spread or we started using some butterfly spreads, has been exceptionally, working for us exceptionally well. We average about $145 to $150 per trade in profits. And they just recur. Quarter after quarter after quarter, we can set up this particular spread for those of you who like to trade some options. Here's where we're sitting on NASDAQ. NASDAQ tends to have a little bit of upward bias going into the July, a little bit of a pullback in mid-July for the summer months, and then it rockets out of here for the end of the year. Same thing on Russell. Russell tends to move sideways this time of year, falls off from mid-July down to a partial part of August. One thing that's been very interesting about all of the seasonality on all the indexes, it has not worked real well. The seasonality has not mimicked what the market has been doing for the last couple of years, and that may be well, you can speculate on why that's the case, but it just hasn't. This year, of course, we had both on the NASDAQ, the S&P, it rocketed out, through the April-May timeframe. Then we went into a little bit of a pullback mode, but it was up, almost 15+% in the first 2 or 3 months of the year. So other things, this presentation's coming up. We have a monthly BAM meeting. This is a webinar on July 6th. We'll be covering mid-year adjustments to the plan and the remainder of and also what we're going to do for the remainder of 2019. You can email me here. You can join me on Facebook there. And then, of course, we do our premium training on Wednesday evening. Next week, we're going to be talking about just refining our target shooting capabilities. And so really glad my son Brandon has joined us with the active trend trading service. And a little bit about me, a little bit about him. And of course, here's my lovely bride, Michelle, and Brandon, his lovely bride, Sharon, and our 2 grandkids. And so it's kind of like having a really good family time with this. And so next week marks the 4th of July. So please get out there, celebrate your independence, keep growing the egg, and trade wisely and profitably. If you want to know how to become a premium member active trend trader, please drop me an email and I'll get you hooked up on a discounted membership. So with that, I bid you adieu. Have a great rest of your weekend and just really enjoy yourself. Keep it safe and sane on the 4th. And I'll say aloha and mahalo, and God bless everybody. See ya.